What's going on, ladies and gentlemen? Welcome back to another helpful video here on Boiler Room Trading. Today, I'm going to teach you guys about the volume weighted average price, or the VWAP. It's an indicator that you can put on your stock chart that is super duper helpful. I do not trade without it on my chart, so I'm going to walk you through how to set it up if you're using TD Ameritrade, the benefits, and really just how to use it in general and why it is such a good indicator and why it is very reliable. And then we're going to walk through a bunch of stock charts showing you examples of how the VWAP can be used in trading, essentially. All right, so taking a look here at the screen, and let me do something here real quick. There you go. All right, let's get that up here. So taking a quick look at my screen right now, if you're not familiar with what the VWAP is, it's called the volume weighted average price. And we're going to get into that a little bit later, but for right now, I wanted to point it out. The VWAP here on my screen is this dotted line. All right, take a look there. So you can see that dotted line going through the middle of my chart. That is the VWAP. Now, I have change the preference in which I'd like to use, and that's why mine is dotted. The reason I have a dotted line for my VWAP is because that's the way I made it to look, and I'll show you how to do that as well. But real quick, before we get into actually setting it up, I want to just go through this very quick and show you. This is actually the market right now, the SPY. And as you can see, it had been running up all day, right? So we were running up all day here on the market and just going higher and higher and higher and higher and higher. And then eventually we finally had a bearish move to the downside, but look exactly what happened. It bounced right off the VWAP. Sure, there was a little mini bounce here and maybe some in here, but the strongest bounce came right off the volume weighted average price. Now, we could do this multiple times looking at different stocks. You're going to see very similar patterns, like right here earlier in the day, Tesla bounced pretty hard right there on the VWAP. It went under a little bit, but it bounced pretty hard there. Let's take a look maybe at Facebook today. What did Facebook do? So Facebook has yet to even bounce kind of off the VWAP or in any of those areas. But if you look at yesterday's trading, you'll come to find that sure enough, we had a nice bounce there, a nice bounce there. We kind of came down and tested there. We played around with the VWAP in this area. So you're getting the point. All right, so before we get into too much more, let me explain this. The volume weighted average price is an indicator that you can put on your stock chart. It's very similar to moving averages. It's not exactly the same, but I kind of treat the volume weighted average price as a moving average kind of, because the VWAP is, what it does is it takes volume, right? It tracks the amount of volume traded and the average price that people have purchased that stock or essentially sold that stock. So it's taking the average volume in conjunction to the price paid per share on any given stock, and that's what allows it to plot that dotted line or the volume weighted average price. So volume in price action is what allows it to plot that dotted line you're seeing on my chart. Now, why is this beneficial to you? Because the volume weighted average price represents the average price point that most people have paid per share on that stock in relation to the amount of volume that it's traded, okay? Let me repeat that. The volume weighted average price calculates the average price that most people have paid per share on any given stock in conjunction with the amount of volume that stock has traded, okay? That's what that means. So that white dotted line you're seeing on my chart, this is the typical and or average price that most people have paid per share today on this particular stock, Facebook, or that was actually yesterday. So let's come over here today, right? So as you can see, the volume weighted average price is a steady, uptick. And that's because the majority of people, depending if they bought up here or they bought down here on the stock chart, it's plotted that this dotted line is the average price paid per share in conjunction to the amount of volume traded on this stock. So why is this useful? Because the VWAP is the average price, meaning a lot of times you're going to see bounces off the VWAP, or if the price is trading below the VWAP, you'll see that the VWAP, or volume weighted average price, holds up as a strong resistance point where you can see resistance or bounces. And I showed you a few examples. Now, if you're using TD Ameritrade, let's go into actually setting this up. So if you had your stock chart up, the way that I would go in and do this is I will go to Studies, and then you go to Edit Studies, or you can go into Studies and you could do Add Study. You can go that way, but I tend to find it's easier just to go to Studies, Edit Studies, and then you can come into the search bar here on the screen and you type in VWAP, and you see it'll be presented right there, VWAP. Now watch me click it. When I click it and Add Selected, you'll see that it ends up dragging over. It presents right here, okay? Now watch what happens. Let me take this one off. Watch what happens if I plot this. You'll see that it didn't do anything different. It stayed that dotted line. That's because I have the VWAP saved as a, I have my criteria saved there. But when you plot it, your VWAP is going to look a little bit different, okay? Your VWAP will actually look a little bit different because when you initially put it on, you're going to have these things on your charts, and I'm about to go over them for you as well. So let's do this, and then we'll take off. Plot, okay. Okay, so now look at my chart. You see that now that there's an upper band and a lower band. When you guys go to put your VWAP on your chart, this is exactly what it's going to look like. You're going to have an upper band, you'll have a middle band, and you'll have a lower band, okay? So the volume weighted average price, what this is tracking here, the middle line is the average price paid per share, and then the ones upper and lower are kind of extended, right? That's where essentially, some people paid into high priced and then people got a very, very low price. So what does this tell you? Okay, so for beginners, if you're just starting to trade, when you guys use the VWAP indicator, I would recommend that you leave it like this, where it's all the bands plotted, where you have the upper band, you have the lower band, and you have the middle band, okay? And if you're not familiar, let's go back in there. So when you go to Edit Studies on Thinkorswim, you type in the VWAP, right? You type in volume weighted average price, VWAP in the search bar, click it, Add Selected. Your criteria in there will have the VWAP right here, upper band and lower band. Okay, so if you were to go ahead and plot that, you're going to be presented with 3 different lines. Now, the way that you're really going to trade this is the middle band is kind of like your middle of the road support level. The lower band is kind of your oversold reversal. So if it sells off really hard down to the lower band, you could expect there's probably going to be a strong bounce. And then if it shoots up really high to the upper band, there's probably going to be a sell-off. What do I mean by that? Well, let's look yesterday on Facebook. This would be a good example, okay? So yesterday on Facebook, you could see that every time the price skyrocketed or shot up really fast and it ended up hitting the upper band of the VWAP, you notice that there was a pullback, okay? Because that upper band is kind of a ceiling. It's kind of a, ooh, we're too high, we'll probably pull back, right? And then what's end up happening is you'll see that the price taps the upper band and then it comes lower, right? Taps the upper band and it goes lower. So you have an idea here where it hit the upper band, then it pulled back, hit the upper band, it pulled back, hit the upper band, it pulled back, hit the upper band, it pulled back, right? Now let's go and look at a few other examples, and we'll use the SPY, right? Let's use this, right? So for example, let's take a look here at yesterday's trading. Remember how I said that the VWAP can act as resistance? Well, here you go. Here's a perfect example where we started up in the morning, we were going up, right? And then we broke down and we were riding down. And then eventually we got a little bit of steam, but what happened is we came all the way back up and we touched the middle VWAP and it rejected, and that's what sent us on a downhill run, okay? Now, if you look at the upper band, what happens, we popped up and then we hit the upper band and came down, popped up, hit the upper band and came down, right? So what we're looking at here is the volume weighted average price is the middle line. The line on the top is the upper band, the line on the bottom is the lower band. The lower band can prove as, a good time or a good area to buy because you might see some bounces off it. So let's look here and let's zoom in. And as you'll see, the SPY bounced right here off the lower band. 1 bounce, 2 bounce, 3 bounce, 4 bounce. And then when the SPY really caught steam towards the afternoon trading, it was just so bearish that it actually broke through the lower band and kept going. And again, the lower band is this yellow line. And what I'll actually do at its studies is I'll take off all my moving averages, so it's just that on my chart, okay? So we'll take all these off. And now let's look at the SPY from a couple days ago. Let's see what's happened to it. Now, I do want to mention the volume weighted average price and these indicators are best used on intraday charts. So 5-minute charts, 15-minute charts, 1-minute charts. You're not really going to be using the volume weighted average price on a 3-month chart, 180-day chart. It's best used on sooner time frames like 1-minute, 5-minute intraday charts. What's happening today, right? So taking a look back at this chart here, you can kind of see very similar, right? The other day we had the SPY touching on the upper band, 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 and eventually we pulled off of it. Let's take a look at some other days here on the SPY. Let's see what happened. Okay, this day, look at what happened here. On this particular day, we dropped down, we bounced super hard off the lower band, and we shot up. We rejected off the upper band, then we shot down. Then what happened? We traded right around the middle VWAP before breaking down, bouncing really hard off the lower band. It's back to the high band, okay? Now, I'm not telling you that the VWAP is going to give you 100% perfect signals every single time, but what I can tell you is that if you're a beginner trader, this particular study and this indicator is really going to help you, because if the stocks are selling off really hard, you'll kind of know where they're expected to bounce when they reach the lower band. And when stocks are shooting up really, really high, you can kind of get an idea of where they might start to sell off when they start reaching that upper band, okay? So you have lower band, VWAP, upper band, all right? So let's point these out. This one here is lower band. This in the middle is the VWAP, and this on top is the upper band. Now, the nice thing, and the reason I recommend as a beginner to use all 3 of them at the same time, is because when you're a beginner, you don't necessarily know when stocks are going to reverse, when they're going to peak out. So these indicators will definitely help you be able to spot maybe bounces, reversals from the top, and where support or bounce areas might be in the middle, okay? So again, the VWAP, upper band, lower band, they should all be treated as particular kind of reversal areas. The middle one, the VWAP, is a strong support intraday when the price is trading above the VWAP. Now let me show you this. Let's go into today. Okay, when the price is trading right here, as you can see, this is price action, right? That's price action. When the price action is trading above the VWAP, which is the dotted line here, technically the stock is uptrending. And whenever the stock is above the VWAP and it starts pulling back, you should treat the VWAP as a support level. And as you can see, it bounced here. We hit the upper band, we start kind of pulling back a little bit. Then we ride up, we pull back, ride up, pull back. So you kind of get the idea, all right? So as a trader, the way that you should use this is, in fact, when stocks are running up and they're pulling back and you see that they're starting to get closer to the VWAP, you may want to consider taking a long position here. If things are pointing up, you can see that support's being built on the VWAP, you may want to take a long position. Or like right here, this massive sell-off, you're thinking, where's a good time to buy for the bounce? When's it going to bounce? Well, the VWAP would be a very strong place to potentially get in on a bounce, because many traders know how to use the VWAP. They use the VWAP. Institutional traders use VWAP. It's such a common indicator that many people use it and respect it, okay? So you as a newer trader, use all 3 of them. I only use the middle one, the middle line, because I've been trading so long that I kind of know when stocks are oversold and overbought, right? Those upper and lower bands are helping you determine when stocks either overbought or oversold, right? And they may be down to come back or go up, right? So that's what those upper band and lower bands tell you. Upper band is overbought, lower band is oversold, and then VWAP is the average price point paid per share for most people during that trading day. Okay, lower band oversold, upper band overbought, middle band, that's the average. Okay, so as a newer trader, keep all three of them. When you get a little bit more experience and you have more years under your belt in this market, you'll kind of understand when stocks are oversold and overbought. Okay, now last thing is, before we take off here on this video, when you go into edit studies, right, you can go into edit studies, and when you click on your VWAP, you can come into here, and the reason I have mine as a dotted white line is because it stands out when it's a white dotted line. So if you wanted to do the same, all you'd have to do is come in here to style, and you can make it a solid line, you can make it a dotted line, you can change the color. And the same thing goes for the upper band and lower band. You can also come into these two categories, and you can change their style, their preference, their width, etc. Right? And once you do that, you're going to want to, hit OK, hit apply, and then you'll be good to go. And your chart will look something very similar to mine. You can always change the colors to the fonts that you like, but I hope that helps, right? So VWAP, when the price is trading above it, we're uptrending. When the price is trading below the VWAP, we're downtrending. You can look for bounces off the VWAP, or you can look for rejection signals off the VWAP. So let's do a quick example, and I'll draw it out for you. So when stocks are trading above and they start falling, a lot of times you'll find a bounce off the VWAP, right? And then if stocks go up, and then of course they actually break down below the VWAP, they can then treat the VWAP as a resistance, right? So above, so let me go back, redo all this. So look at it this way: when stocks are above, VWAP is support. When stocks break below, VWAP is resistance. When stocks break above, VWAP support, below resistance, above support, below resistance, okay? And then we'll do this. When stocks shoot up really high, they'll probably hit the upper band, and then they'll pull back. They may come back down to the VWAP and run again, and then they hit the upper band, and they'll pull back, pull back. These upper and lower bands are very similar to Bollinger Bands, okay? When stocks get oversold, they can hit the lower band and bounce, right? And then the middle VWAP is resistance, then bounce, right? And then they come up, come down, right? So there's a way that they trade. So I hope that video helps you guys. Please leave comments and questions in the comment section. That helps me know what to do for my next videos and whether or not you guys liked it, or if I need to make another video clarifying this. So again, before you head out, check out the description box below. That's how you can join into our live trading room, our free chat room, and our stock trading group on Facebook to stay connected with everything that it is that Boiler Room Trading does. If you'd like to be emailed free watch list every morning before the market opens, join or go to the first link in this video in the description and create a login on our website. That will get you on our mailing list, and we can send you free watch lists every morning before the market opens. Take care, guys.